fundsupermart.com.
Hi, the JPMorgan Emerging Markets Dividend Fund has a relatively short track record as it was only launched in 2012. How has the fund performed since its launch and on a year-to-date basis?
Since the launch, the fund has returned 2.5% in US dollar terms. So that's a pretty pleasing return when we compare it to the benchmark return of minus 0.7% in the same time period. And on a year-to-date basis to the end of April, the fund's returned 2.4%, again in US dollar terms. And again, that's beaten the MSCI Emerging Markets benchmark, which declined 0.1%. If we look at what's driven the performance, really the fund has benefited from its exposure to stable cash flow generating companies that pay out dividends, particularly in areas such as Brazil, the Middle East and China. If we think from a sector viewpoint, the fund has really benefited from large investments in the telecom sector. This is an area where companies have generated good profits over time and they've paid those dividends back to shareholders, and that's been rewarded in terms of share price performance. Another area that we've found very interesting is the consumer discretionary area, an area in emerging markets where there is a very decent level of growth still, and those companies can pay good dividends to shareholders.
How does a focus on dividends set the fund apart from other emerging market equity funds?
This fund only invests in dividend-paying stocks in emerging markets. We aim to have an overall higher yield than the market. And what we're really looking to do is to build a portfolio that has the best combination of good dividend yield and future dividend growth. We have a strong emphasis on finding companies with high profitability and cash flow generation. And what that results in is a portfolio that's very, very different from the market and quite different from other emerging market equity funds. Clearly, because we're looking at these cash flow generating companies, the portfolio tends to be a little bit less volatile than emerging markets. These companies generate a lot of cash flow, and obviously we're looking for companies that pay dividends back to shareholders.
We last interviewed a representative from JPMorgan on the same fund in July 2013, when the fund held 17% of its portfolio in South Africa, which was its top holding at the time. This allocation has since decreased to 11.9%, while holdings in China, Taiwan and Brazil are now the top 3 countries the fund has exposure to. What are the reasons behind this shift in portfolio allocation?
Well, South Africa remains a very important market for us, and that's because it's an area where there are very many well-managed companies that pay good dividends. But we did bring down the exposure last year, primarily reducing some of our domestic financial stocks in that market. And that's because we thought that they would be a little bit more vulnerable fundamentally in an environment of tapering. We did increase our exposure in Taiwan. That's an area where we find many interesting high-yield stocks, particularly in the technology space. So there's a lot of companies here generating good profits and cash flows and paying out dividends to shareholders. Areas we're interested in include companies that are involved in industrial automation, growth in cloud computing, and also the semiconductor chain. And finally, China and Brazil have both been large allocations in the fund for some time. Again, both have a large number of high-yielding stocks that we can take advantage of. And in Brazil in particular, the Brazilian market has a mandatory minimum dividend payment requirement. So that immediately makes it quite a rich source for us of dividend-paying stocks.
Thank you.